And welcome out to our halftime report here on a Thursday, 10/18/2018. Markets are volatile. We have a lot of action going on across the broad markets. Very important day, in my opinion, from a technical, an emotional, a psychological standpoint for bulls and bears. Matt, how you doing today?
Doing really good, Tim. Enjoying the market. When we got done with the halftime report yesterday, we did a little rapid fire, and we quickly went through 5 or 6, stocks that were setting up really good from a bearish perspective. And today they all triggered in yesterday or today, and they're all looking good right now.
I agree with that. There's a lot of action going on in the market, commodities, equities, you name it. One of the most important ones, in my opinion, has been tech. We've talked about it all the time. You know my love of technology stocks, but that's both bullish and bearish, Matt. My favorite setup for this entire week was Facebook, and it has taken it on the chin here today from a bearish perspective. We'll get down to some individual components as we go. Let's start with the S&P 500, Matt. You've got some interesting price action here from a technical perspective. You had the sell-off we talked about last week, a week ago Wednesday. You then had the snapback rally, but then there's no man's land in here. And now we are selling back into the 200 period moving average to a tail. That thing hit the 200 MA and bounced here just ever so slightly in the last few minutes. What's your read on the S&P?
My read is the same read I've had for the last little while, Tim. We talked about it earlier this week, I believe on Monday or Tuesday, when I compared the market today versus the market in 2007. And if you'll remember, going back to 2007, it was not a V-shaped risk graph where it went boom, boom, and it went straight back up like we've seen in other 10% corrections in the market over the last 10 years.
Mm-hmm.
I think it's going to be a choppy ride. I think it's going to be a bumpy ride. It's not going to be a V-shaped. It's going to have a battle between the buyers and the sellers. I still believe that the most likely scenario is that we go back to the all-time highs, but it's going to be a battle, and you're seeing that today. I mean, you look at the last week in earnings. Earnings has been relatively strong, right? It hasn't been as strong as we saw in the second quarter, but it has been relatively strong. But the market is not responding, even on some earnings reports that we even see today, yesterday, and the day before. You would think the market would respond, bullish off that, but there's always the market's pointing to some degree of concern. And so, I think it's going to be a choppy ride. It's the stock pickers market. You got to be able to, shorten your time frames, lower your position size, and if you don't have a good read on the market, you should take a step back and virtual trade until you do get a good read on the market. But there are some wonderful, wonderful opportunities on the short term.
The headline, and you're going to see this over and over and over again, Wall Street hit by weak industrial earnings and the hawkish Fed. Well, Matt, the Fed has been hawkish now since Jerome Powell got put into office. It's just the news, they find excuses, don't you think?
Yeah, they do. But I saw an interview. I don't know if it was this morning or yesterday, but I watched on CNBC. And the only reason I watched on CNBC, I never watched CNBC, but the only reason I did, it was just on FinViz, and it was Alan Greenspan giving an interview. And he was talking about how, he was talking about Jay Powell and how Jay Powell is a great Fed chairperson. And the whole conversation was on, the president putting on some political pressure on Jay Powell to stop raising interest rates. And Greenspan was asked if he had ever been put pressure on in his 18 years as the Fed chairperson. And he was from 1986 till 2004. So you're talking Ronald Reagan, George H.W. Bush, Bill Clinton, and then Dub. And he said every single one of them it put pressure on him not to raise rates. And he even said, in my time as Fed chairperson and understanding Fed history, there has never been a single time where a politician actually recommended raising rates. but the Fed has to be an independent arm to the economy, and the economy is not just the stock market. It's the real estate market, the stock market, the industrial market, retail sales. It's a big. Sometimes we just assume it's the stock market, right? That's what we assume, but that's not the truth. The economy is big. And if the Fed doesn't raise rates, the only thing that's going to happen is increase costs. So obviously, from a political perspective, if I was president of the United States, I'd be calling Jay Powell and be like, hey, man, you're going to screw me by doing this. You better stop raising rates. I'd do the same thing. I'd put pressure on him. But at the end of the day, Jay Powell's got to do what Jay Powell's going to do, and he's going to raise rates. That's been the case. We've known that for a year now, Tim. There's nothing there. The headline's the headline. The headline's just trying to give it a reason. The reason is the market has not picked a side yet. The trend has not developed yet, and it's going to be choppy.
Well, first of all, raising rates has been the slowest developing plot line in the history of anything, quite frankly. They've been talking about raising rates for 6 years.
Since at least 2012.
Exactly. Now, in 2012, they started dropping the hands. Hey, listen, maybe one day we're going to raise these rates back up. Be cautious. Yeah. And so we started thinking about it. They pulled quantitative easing in 2014.
Once they started tapering, right? They started tapering in 13, 14, came off it in 15. Then we thought they were going to raise rates in 15. And we thought the market cycle was going to kick in 15 and 16. And then Janet Yellen did what Janet Yellen does. And she listened to William Dudley and Bullard from the Fed. And like, oh, we can't raise rates. The market's too, if you'll remember right, Tim, in 15, we kept thinking, okay, once unemployment gets down to 6%, once unemployment gets down to 5%, once unemployment gets down to 4%, once inflation gets to 2%, we kept hearing all of these things. And what you and I keep saying, guys, you don't have a control of inflation. Once it gets to 2%, that has a lagging impact. That's going to go to 3%. Where we're at right now is 2.8%. If you don't raise rates, you better enjoy a big increase in inflation. So for all the Twitter, finance experts out there bemoaning rising interest rates, enjoy that higher cost if they don't. I think Jay Powell's doing his job, and I think he's doing a good job.
Real quick comment on Alan Greenspan. Man, he looks good for 92 because he looked the same when he was 62.
Yeah, I don't think
30 years. He hasn't really aged.
No, I don't think he's
he looks like the same man.
Paul Walker was my favorite actor for a very long time, and he died a few years ago. But I don't think he aged in 20 years. Alan Greenspan hasn't aged in 30.
Yeah.
He's been in cryo freeze. He just comes out of the freezer to come give an interview. That's all he does.
He's like the Nixon head from Futurama. There's a couple of things he did say in that interview that I do want to touch on as well as we go through the markets. He's saying this is the tightest labor market he's ever seen as well. He's talking about interest rates and the Fed and the politicians and everything. But in 50 years, having unemployment this low is not necessarily good for the labor market in some regards, because then wages are going to have to go up. It may affect corporate profits. I don't think it's a bad thing.
Consumers, I think consumers should have wage increases, absolutely. And if corporate profits suffer in that capacity, so what? I'll short your stocks and make up on the downside.
That's the way I feel as well. There's no doubt about it. But it just interesting. I mean, when a Fed chairman says tightest labor market in 50 years, it caught my attention on that as well. Greenspan's interview was fascinating, and that's why we're talking about it. ES here hitting the 200, Matt. I actually think the market's looking to strengthen here intraday, just in a very, very few minutes. Halftime crew, first of all, welcome out. It's great to have you guys.
Good to see you guys.
Always great to come in here and do some good. Where we are right now, technically, Matt, it's a really hard day-by-day read. There's no doubt about it. The pivot trigger on the downside, many bearish traders would have taken that and said, hey, here we go. Now, on the S&P, I think you've got some support holding it up. Not only do you have the candlesticks from Thursday, Friday, Monday, that were the tops of those tails, but you have the rising 200-day moving average. ES contract, where do you got support on this thing?
Well, the support's got to be the 200-day moving average. There's no doubt about that. I don't think there's a debate there. But one thing I'll say about yesterday's rally, Tim, is it gave that buy the dip mentality more hope, right? And for those of you who don't know what the buy the dip mentality is, it's not buy the dip after a 10% correction. It's buy the dip on the intraday chart is what the buy the dip mentality is. And yesterday, as you can see, I'm going to drop it down into an intraday chart here. Yesterday, and we're looking at Wednesday here. Here you got the dip at the beginning, rally at the close. Big dip at the beginning. And what are we already seeing here, Tim? We're seeing a nice little rally gaining steam coming back up. So I do think there's the buy the dip mentality did get a little bit of lifeblood yesterday, if you want to call it that, and you're starting to see it earlier on today. I still think there's wonderful bearish opportunities out there. I'm not seeing a whole lot of great bullish swing trades outside of on the intraday because of the trends and the patterns have been so butchered over the last month or so. But there are some great bearish opportunities out there. Intraday, I think you're buying. Swing trading, I think you're selling.
Well, swing trading, I do believe you are selling and looking for weakness off of this pivot point. There's no question in my mind, but there is also volatility trading and whatnot. Matt, this morning I wrote out my schedule for the day. And I have a very disciplined approach to my trading day. I do morning prep before the market. I do hedging and adjusting when the market bell opens. My day trading, I was done by 9 o'clock. I hit my target, so I was done for the day. And right now, during this period, during the halftime report, it's mostly about analysis and understanding the market and preparing moving forward. If I'm going into tomorrow and I haven't made a trade yet today, okay, I'm probably looking for a bearish swing trade. I'm with you 100%. But if you already have only bearish swing trades in your account, you might just be looking to balance it out or what not.
Think about a conversation you and I had about 10 minutes before the close yesterday, right? And about 10 minutes before the market closed yesterday, obviously the intraday was very, very strong. And at that point, I called Tim and I said, Tim, I got trades on Facebook, and I got trades on the VIPs, and I got short trades on this, and I had like 5 or 6 short trades I entered in yesterday. And I said, I need something to hedge, Tim. That's all I said. I said, I need something to hedge here because I don't want to carry a strong bearish delta into the market tomorrow with the ratio of my bearish trades being much higher than the ratio of my bullish trades. And I said, just give me something to hedge, right? And Tim says, well, you can always hedge with the diamonds. And I'm like, I don't like that. So, well, you can hedge with the Qs, you can hedge with this. So I don't like that. Give me a stock. I don't even care what the stock. Just give me a stock you like. And he says, okay, just go buy Boeing, right? Just go buy Boeing. And I said, okay, I like Boeing. I'll go buy Boeing. And the entire analysis was this, okay? I need something to hedge. Tim, give me a stock you like. I don't care if it goes down because I have more bearish trades on. And then I called him up this morning. I said, Tim, you told me to hedge with Boeing and you told me to hedge with Apple. What kind of trader are you? I was totally kidding, obviously, totally kidding. But no, I mean, I think that's how you have to approach the market to a certain degree. That on a daily basis, you have a slight edge one way or the other, but you can't go in there with a strong bias. You just can't.
First of all, forgive me for not knowing this in advance, but who sang that rock anthem, Give Me Something to Believe in? Was that Bon Jovi?
Is that Journey? Give me some Journey. I want to say Journey.
Poison. No, Poison for sure.
Sounds like a Journey tune.
It could have been. I mean, both good bands. Here's the thing about the bull side of the market right now. Give me something to believe in. Apple, Boeing, some of the stronger fundamental companies. Most of the bullish action, Matt, when the market has been going up day over day, like it did on, say, Tuesday, was just snapback rallies. It was stocks that were oversold, like financials that went back up.
Well,
really hard.
That was my entire take on Goldman Sachs yesterday. It was a great snapback rally, but it's doing the same thing every other stock that is a good stock out there. They're rallying back into resistance channels, and that makes it so hard. I mean, Tim, looking at the market here, and we can look at the Dow and all that, but they're all kind of looking very, very similar there. But Tim, if you kind of look at scanning for bullish trades right now. Okay. So I'm going to do a little bit of a scan, just specifically trying to find bullish trade setups. Okay. And let's go to the screener at FinViz. And I like to use FinViz just to kind of, filter through my scans. I know you use a lot of Thinkorswim scans. I don't use a lot of Thinkorswim scans because they're not good technical scans. And I usually scan for technicals, whereas Thinkorswim scans for like volatility and, penny options and stuff like that. So I always kind of hear, and I'm just going to walk you guys through this methodically, kind of how I personally go about this. I always go to plus mid. I never look at smalls. I always go to plus mid, and then I come over and I just work left to right, and I say, okay, average volume, I want over 1 million shares. I want to see liquidity here. Then I come over here, and if you want to scan for different sectors, you certainly can. Different industries, you certainly can. Different indexes, you certainly can. But I come over here and I say, okay, give me optionable and shortable. Yes, Elon, we do like shortable stocks. And then we go, I always go over 10 here. Okay, so that's kind of just the base thing. And as you can see here, I got 831 31 stocks to look at. Obviously, that's too much. So I come over here to the technical tab and I say, okay, if I'm looking for bullish trends, I want to see a 200-day moving average moving up, right?
You want bullish or bearish?
I want bullish. I'm scanning for bullish.
Okay.
I want a 50-day moving average moving up, and that drops me down to about 166 stocks here. And then I say, okay, I want a 20-day moving average going up, and I got 120 stocks on that list. And that's going to show you a lot of strength in those charts, but a lot of times they're overextended, like you see here on ABX. It's overextended, it needs to come back down type thing. So a technique you can do is you can look at price underneath the 20 simple moving average, and what that will show you, Tim, is a vastly different type of technical setup where you should see. And now think about it like this, halftime crew. You have the 200-day moving average up, you have the 50-day moving average up, and you have the stock underneath the 20-day moving average. A lot of times what you're going to see is type of stocks that are forming bullish retracement type opportunities. And you're looking at here. And then I just basically go down the list, and all I'm doing, I'm not looking at the stock, care less about the stock. I'm looking at the trend and the pattern. AET, double top, breaking of support, get that one out of here. Abbott Labs, you don't love the retracement action here, but you know what? You might not be able to find something you love on the bullish side, and you might still need it. So you need to go look for it. Another one here, AMD. We talked about AMD in the past, Tim. AMD, one of the biggest turners and burners over the course of the last year, retracement down into those rising moving averages. You might not like the severity of the sell-off here, but it's certainly slowing its momentum. That's something to take a look at. Looking at some more, just kind of going down the list. Look at that perfect trigger on Boston Science the other day. Cody called me, Tim, not called me, but in the pre-production show, I know Cody's into Boston. I'm into Boston. I believe you're into Boston right now. And Cody's like, hey, man, are you taking profit here? I'm like, I can't take profit on Boston. There's not even an option for me to take profit on Boston. Because if I take profit on Boston, that's one of the only great bullish trades that are in the marketplace right now that are actually working out. So if I take that off, all of a sudden I still have a negative delta problem when I don't want negative delta. So Boston here is still something that looks pretty good. CLF right here, you're retracing back down into two rising moving averages, coming smack dab into the old support, old resistance at $11. CLF could be a good potential opportunity. This, Tim, EC, you see this here, Tim? What do I call that pattern?
That's Snapchat pattern.
That's Snapchat pattern. Yeah. Okay. Snapchat, there's no buy signal on Snapchat ever, right? That Snapchat pattern is the precursor to the head and shoulders. The head, left shoulder, head, and then the bottom channels here have to be equal. That's Snapchat pattern. EGN right here. EGN is setting up as a potential bullish trigger. So my point is there are opportunities on the bull side, Tim. But if I ran these types of similar scans and I said, okay, give me something under its 50-day moving average. Let me, there we go. Price below its 50-day moving average. And let's take that one off. So now if I'm looking at stocks that are below the 50-day moving average and below the 20-day moving average, Tim, there's not 100 stocks. There's not 44 stocks. There's 584 stocks that are doing that. And those, a lot of those stocks that are below the 20, below the 50, but yet a lot of them kind of above the 200, there's really not a lot of trades there on the bull side. And that's why there is more swing trading opportunity on the bear side, simply because there's more stocks in bearish downtrends on a short-term basis versus bullish uptrends. And I think that's going to be the case for the next few weeks. That's why I think it's better to be on the bear side right now, but you got to pick your spots. You got to pick your spots, and I think you got to come into some degree of hedge.
I did a thought of the day a couple of months ago, and I'll reiterate it if I can get that word out right now. Is there's three different ways to find trades. You have your watch list, you have your pick list, and then you have scanning. And on a daily basis, you're going to rely on those different avenues, Matt. Your watch list are going to be stocks like the Tackle 25 that you use over and over and over and over again. Your pick list are things like the option report from the weekend or the stock report from the weekend over at Tackle Trading, where you have a list of curated ideas that could be developing, throughout the week. Mm-hmm. And then scanning is a mandatory thing. You have to have the skill set to go find new ideas during a given day. Do you usually wait to scan till midday though?
I always work. I never scan in the morning.
Yeah, me neither.
If you're scanning in the morning, you didn't do your job the previous day. First and foremost, Tim, I always work off those scatter reports all week long. Okay,
Mm-hmm.
that's my primary watch list for swing trades, both bullish and bearish. On the cash flow type naked puts, cover calls, and whatnot, I'll do mostly tackle 25, but I'll also do other stocks outside of that, like AMD and so on and so forth. But when you're talking about finding a swing trade, you got to be methodical. You got to be systematic in your approach. I go through my watch list first, and if nothing's setting up on my watch list, then I go through scanning. And typically, I'll scan in midday. I'll scan midday, kind of like what we just did, or I'll scan at night, preparing for the list for the morning. But no, you want to execute your trading plan in the morning, Tim. You don't want to go out there trying to find stocks. You want to be prepared for it in your daily routine, and that's kind of what we do here at the halftime report every day. You got to check the news, check the economic calendar, check the market indexes, manage your portfolio, manage your delta number, manage your theta number, and then you find new trades based on what your delta and your theta tells you what you need to do. And I just go through that methodically in the morning, the same way you do. And then when I get to placing new trades, I have a list of 20, 30 stocks that I hit over and over and over again. If there's nothing setting up, then I'll scan.
Earnings keep coming through the market, obviously, day over day. We're right in the heart of the first week of what I would call the busy earnings season. This week, next week, the week after, we will look at a heat map here in just a minute. Let's break down all the different indexes. Let's start working through our markets one step at a time. ES we've looked at. Let's look at the NQ or the YM, either one. YM, either one is fine. Whichever one you want to go first. In my opinion, the NQ, nasty bear pivot earlier in the day. But I think at this point, if you're day trading, you've already missed it. Number one, you're already at that point in the day where who knows where it's going to go between now and the end of the day. You'd have to get more confirmation from here. And Matt, at 71.71, in my opinion, is in no man's land. You've got the rising 200. You've got a support point right there. There are bearish trades in tech, but not on the entire index. I think Facebook, Baba, some of the other ones that are pivoting and triggering, I love those setups, and they are looking very, very good here today for a trader. What's your read on tech? Because it's the biggest sell-off on the major indexes.
Well, it's doing a lot of what the S&P is doing, though. I mean, it is percentage-wise, a little bit bigger, but the NASDAQ's always going to move a little bit more on the upside and a little bit more on the downside. So that's nothing to be too shocked about. If you're looking for a shorting opportunity here, I don't think you have it. But one thing I am looking at on the NASDAQ from an intraday perspective is how the market's going to respond here at 7,200. At 7,200, we've seen this act as support resistance in the past. Obviously, it blew by it today at the opening of the market. You're forming a little bit of bearish retracement here. But it's been so beat up. The buy the dip mentality is alive right now. I don't want to say it's alive and well, but it is alive. So I'm not really looking for a shorting day trading opportunity. I'm kind of sitting on the sidelines to see how this market's going to respond midday coming into the close.
I'm with you. Between now and say 4:00 Eastern time, it's just going to be more about, for me, prep, hedging, setting up earnings trades, volatility trading. I think you're in no man's land, in my opinion, watching the close. And we've said this for a week and a half here, Matt. The end of the market has been much, much more important day over day than the beginning of the market. And NASDAQ could rally back in here. You can take your time to prep, don't you think?
Yeah, I don't think you ever have to force trading, ever.
Yeah, I agree.
If you don't have a good read on the market, don't force the trade. If you're a little hesitant on your read of the market, then either sit on the sideline for a day and kind of wait for the trends and the patterns to develop, wait for volatility to subside. It always will. And then, and while you're doing that, virtual trade. If you're in the market right now and you're a little cautious, make sure you lower your position size, thus lowering your risk, and be a lot more systematic in that approach. To me, I don't have a good read on this intraday because the intraday trend is down. And right now it's forming a bearish retracement, which on a typical day, Tim, I would short here. But given the fact that the market bought that dip so strongly yesterday, I'm kind of waiting to see if that's going to happen again today.
Yeah, I agree. Activision is the biggest seller on the NASDAQ 100 today. Gaming stocks are taking it on the chin. ATVI. Take a quick peek at this one.
Unfortunately, stocks?
Well, I like Activision. I've been a Blizzard fan for 20 years, ever since they came out with Warcraft and StarCraft back in the 90s when I was a kid. I love those games.
You act like you don't play Warcraft in the 2000s when you
I did, but no, but what I'm saying is I was giving homage to when I was a child.
I'm with you. I'm with you. I'm with you.
ATVI.
I didn't see the news. What was the news? Do you know?
Yeah, the Call of Duty Black Ops 4, I guess, had some kind of, announcement on how much they've been selling. It wasn't good news from what I understood. I saw the headline. It says Black Ops 4 cast a shadow over video game stocks midday.
That Black Ops 4 game is an amazing game. Okay. I played about 15 hours of that game with my son playing zombies. Best zombies map I've ever seen. Those sales are going to increase.
Maybe. I mean, the stock gapped down on a news event that was not planned.
Let me give you a little bit of insight on Black Ops. And this is coming from my 16-year-old son. I said, Tanyan, we were playing zombies last night. And I said, Tanyan, and we were on like round 15 or 20. Can't remember. I said, Tanyan, why aren't you playing multiplayer? And he says, because all the tryhards play multiplayer at the first. You got to wait about 2 months and then everybody else comes in. Listen, I'm telling you right now. And I, as a trader and as an investor, I thought, oh, wow, that actually makes a lot of sense. So I'm taking the advice of my 16-year-old son on this one. I'm not buying it yet, but I'm just saying Black Ops is going to see an increase in sales.
Well, I love Activision. It's a very tradable stock. It's very liquid. It has options. It has good option chain. It's been on my watch list many times. I don't have it currently in any watch list.
I don't have it anymore.
But the gap down has me interested potentially in some volatility ideas.
Gap down to the 200-day moving average with an intraday bounce back up. I mean, you're looking at a stock. Let's look at a stock that has been very consistent on its 200-day moving average. Tim. Yeah, very consistent on its 200-day moving average. If you look at the 3-year weekly chart, Tim, I get the short-term volatility, but as a trader, as an investor, like, wow, that looks pretty decent.
Well, and by the way, out there, crew, a couple things. Number one, when a stock gaps down that you like and it finds support, if it was on a non-earnings or earnings, there is a strategy that is very common. Doesn't mean that it works for this one right now, but you just come in and sell a bull put spread or a naked put, Matt. A lot of investors look for opportunities like this. They call it playing off the volatility or playing the gap.
Well, it's just an overreaction to the news typically. Right?
Yeah. Well, and if you go out of the money, you get cushion. Let's say you go all the way down to like the 70 strike or whatever it might be. You can sell off of that volatility and probably get a pretty good credit, maybe even the 65 there. Yeah.
Let's see the 65 here. On a naked put, you can get a mid price of 102 margin. That's a wonderful naked put. 650 buying power for 102 credit off a gap down. You're selling all the way down here. Right? You're selling all the way down there. And Tim, if it comes down to 65, you can either make the decision to take ownership at 65 because you do have strong evidence over here at 65 of acting as a support level, or two, you can make a decision just to get out of the trade. The most likely scenario is you just cash flow the $102 and you make about 18% ROI over the next 29 days. The only question you have is you got earnings on the 8th, so you got to get out of the trade before the 8th, or you got to make sure that you look at an expiration date that comes before the 8th. But yeah, that or you can do the bull put spread, obviously. But yeah, that is a strategy, and it's not a bad one. It's good credit.
Yeah, I like gap trading.
Can't hold through earnings. Can't hold through earnings.
And I do like gap trading post earnings, which is what we did with Netflix yesterday. But the NASDAQ here down today, give you an idea of what the performance internally of the NASDAQ is, Matt. The top performing stocks are Costco at 0.29% up, O'Reilly Auto Parts at 0.78% up. Not a lot of strength. There's hardly anything up on the NASDAQ today. Activision, C-Trip, Workday down 4%.
You got two stocks on the Dow, right? Verizon's up 0.83% today. I know Walmart's down a little bit today, but showing a little bit of relative strength. Mark and Tim, every one of those names, not everyone, but Walmart, Merck, Verizon, those are all safe haven stocks, Tim.
Oh, and as we talked, Chevron just went up a nickel. So you got Chevron too. But you're right. Safe haven, energy, consumer staple type stocks are the ones that are attracting anything.
I do not think it is a bad idea for an investor to put some safe haven in their portfolio.
I agree with that. Let's move on to let's take a look at the Russell, actually. We've kind of talked Dow. We've kind of talked S&P. We've looked at those, but I think the Russell is the weakest. Now, when you're talking about international concerns, I saw a story overnight and this morning from the World Trade Organization concerned about the tariffs. Who isn't concerned about the tariffs? Let me fill you in on this, guys. Everybody's worried about the tariffs eventually impacting earnings and trade and global economics. Okay.
Let's just get it out, right? Let's get it out. So any headline you see over the next 6 months, you heard it here first, right? Well, you actually heard it 9 months ago, but we are all concerned about trade wars and tariffs, and we're all concerned about rising interest rate environments. So any headline you see about that, everybody's concerned. Okay. Preach it to the choir.
My biggest concern is I want to know what Alan Greenspan is eating because he might be a vampire. The dude looks like he's going to live forever.
He was a vampire 30 years ago.
I'm just saying. RTY pivoting down here, Matt. Weakness.
Cody, yes. Cody.
I loved
bear calls on the right. Yes.
I love the analysis Mark gave yesterday. Small cap companies tend to borrow more. You think about these debt-driven companies, IPO type companies in rising interest rate environments and harder trade restrictions. They're not the established Apple or whatever it might be. Small caps, it makes a lot of sense to me why these things are taking it on the chin here.
Then whenever we say stuff like that, and the logic makes sense, okay, the logic makes sense here. But whenever we say something like that, I always want to go look at other time frames, for example. Okay. So if I go 15 years here on the rut, right? And are you going to let me go 15 years on the rut?
Maybe RUT. It might not do RTY.
Yeah, it won't let me do RTY. Okay. So if you let me go 15 years on the rut and we go back to kind of that 07 area, right? So 07 right here. Dip in early, same thing we had. Dip in July. Now, I want you guys to look at this dip in July in 07 with the rut. Real big downward movement, okay? Real big downward movement. Comebacks up, hits the high, real big downward movement, right? So you had multiple flares here, but in comparison to the SPX, right? In comparison to that SPX, let's go back and see that same time frame, okay? Here, you got your dip here, you got your dip here. It was relatively weak compared to the S&P in 07 as well. And so that just gives you greater credence that the rut is going to underperform the rest of the indexes because there is a historical narrative that says they do underperform in those conditions.
Listen, I get you want to look at multiple timeframes all the time, but if you had to rank it, it's still the weakest one, right?
It's been the weakest one for
a long time. That's been you actually were way in front of that before I was. You had the rut as more weak and bearish than I did back when it was still holding up above those support.
I went bearish on the rut before it broke support, Tim.
I know. And listen, this is a perfect bear retracement pivot, Matt. You're looking at a confirmation candle heading to the downside. If I am hypothetically in some kind of balanced, neutral, out of the money iron condor, I'm probably hedging downside risk here today.
You absolutely have to hedge the downside bull put on the cash flow condor system.
Well, and here's the thing about it. I want everybody out there to
think how far out of the money you are, though, Tim. I mean, if you entered into that bull put here, you don't got to hedge that. If you entered into that bull put here, you got to hedge it.
I get that. But if you don't at least map out the hypothetical of what you could do, even if you're 200 points out of the money, I don't think you're doing your job. That's my opinion about the way to manage those trades. That's my own philosophy. Some other traders would disagree. Coach Emily, who does a lot of condors, she says, listen, set it, forget it. Don't even look at it. Right. Coach Tyler says hedging should be something only on extreme circumstances. I'm a much more active hedger because I like to keep the delta in line with what I'm seeing in the chart.
I agree, but I will say that for most traders, it is my opinion that they hedge too much.
Probably. Yeah. And if the hedge is designed as a way to try to make money here, there, and the other thing, that's not necessarily what it's for. If you believe that pivot has risk, Matt, then don't hold on to risk on the downside alone. Doesn't mean you have to exit your trade.
No, I don't disagree, Tim. But for most people, when they're hedged, they're making an emotional decision and not a rational, logical decision. They're making an emotional decision because they're losing money and they want to make up that money they lost. I trust the Black-Scholes model probability more than I trust most people's ability to hedge in an emotional, volatile condition.
I like that. I like that as well. Let's take a look at all the other ones. Let's go through the VIX here today. We don't look at the VIX every day, but I do want to take a peek at it. The VIX is now
Go ahead.
The VIX is now hitting levels and staying consistently up there for a few days. Obviously, there's market risk, everything we've been talking about. I don't want to call it a comeback for the VIX yet, but we are sitting at the 20 level, and we are up in the 20s. Higher volatility will be better for credit trading, Matt. For cash flow people out there, the only reason I want to bring this up, I don't think it's going to impact what you do today, right? Which is what your argument has been for months and months and months. But if we do go through a period where there's higher volatility, it will benefit many traders if you are disciplined and approach the market the way that you're supposed to, because there's more money in the options, right? Any thought on the VIX? I got to throw it back to you for a second.
No.
None. All right, crude oil. Okay, crude oil.
Let me change my time frame so every time we switch a chart, it doesn't go 15 years.
Oh, no problem.
Just give me 1 second. There we go.
Crude oil is dipping down here, still in a bullish zone for a lot of traders. Whether or not it's holding, it did not hold 70, Matt. What's your read on this candle?
Well, I went long yesterday.
Mm-hmm.
I bought I caught the falling knife, Tim. Things I have told traders not to do over and over again. I got creative and I caught the falling knife. But I am perfectly okay with that. I took a small position on USO directionally, using call options. And come on, USO, give me up here now. USO doesn't want to play. Okay, there we go. So, to me, I believe in the bullish case, especially in regarding to Saudi Arabia. And I know it's going to be volatile. I know it's going to be crazy. I know it's going to be up and down. And I'm okay with that. I took a very small position. And if I lose the entire position, I'm okay with that.
Well, that's what swing trading and spec trading should be about, right? I mean, money management and position sizing is probably the most important part. Guys, every trader I've ever met is wrong quite often, right? Whatever that percentage is, we all have our expectancy, Matt. And I have no problem with the aggressive entry point because you position sized accordingly. It's a position trade or a swing trade. What would you call it? Are you looking for a week?
Trade. No, I'm looking for months here. For me, it's a position trade. I bought like a year's worth of time, Tim.
Well, and on that timeline, by the way, I actually like it. I do think oil will go back up, and I do believe in the bullish side of it.
Mind you, Tim, I will short against that long position if I'm wrong, if I start to see breaks below support levels.
Yeah. Markets are weakening.
Yeah, I am going to keep my long position trade on because, again, it's more of an economic theory than it is a technical analysis trade. I read a report yesterday that the Trump administration and MBS, from Saudi Arabia, that they're trying to work a solution to the problem of them killing this journalist, right? And they're trying to find a reason that is justifiable for the murder of this journalist he was an American citizen, but he lived in America and he worked at the Washington Post. I don't think that's going to end well, Tim. I don't. And I think eventually you will see some sanctions come on Saudi Arabia for this because this is a very, very big deal. I mean, I might be a little more, on it than say you are, but it does remind me of 1914 to a certain degree. And I told you that the other day, but I do believe there might be sanctions coming in. And for the love of God, we should stop bombing Yemen and supporting Saudi Arabia. And I think oil is going to have an appreciation. I don't buy the $400 oil. I think that's utterly ridiculous. But if sanctions come on Saudi Arabia, Tim, and again, that's not a guarantee. I don't even know if that's a probability, Tim. I really don't. It might be a 25% probability. But if that does happen, I do buy the bullish case for oil and I want to be in it.
I'm with you. I understand that 100%. I understand why you would make that case because I actually agree with a lot of the logic. Not only Saudi Arabia, Matt, you have the sanctions coming onto Iran next month, which is only 2 weeks out. We don't know what that's going to do to affect the supply. Now, the one factor could be global demand. We have seen some bearish markets across the globe.
That's my concern.
Yeah.
The global demand based on recessions around the world, that is my concern on this trade. That's why I took a very, very small percentage against portfolio here.
Yeah. A lot of companies I want to take a look at coming into earnings as well, but I want to wrap up the commodities. Go on to gold, if you would. Gold, silver, they're all moving into bullish opportunities, in my opinion. Gold is showing me strength, Matt. You now have a new entry point developing at 1240, because if we break the high side, that's just momentum up. If you're not in gold yet, look for a new trigger. By the way, that's true of every trade. If you're not in and you have an opinion, look for a trigger and build a plan.
I think you could be a little more aggressive up above 1236 here. I'd get the 1240, but I'd put it right around 1236, 1237. I think that would be a new entry. What you're forming right now on gold is what it's known as a high base, right? That's kind of what you're forming. You got the breakout, it slowed down, you didn't retrace, you form a high base. The trade signal above any high base is above the high of the candles. So you're looking at somewhere between 1236, 1237 in that capacity. Silver is the one I'm getting excited for, Tim. And when we were in the pre-production show, I asked you and Cody this. I said, guys, I'm close to pulling the trigger here. Talk me out of it. Tim, I'll say the same thing to you live. I am close to pulling the trigger here. I know it's under 15. I know it's consolidating in an ascending flag type pattern. But I love the fact that the 20-day moving average is crossing above the 50-day moving average here. I love the fact that over the last 5 days, even as it came down, it's tested those moving averages and has not came underneath those moving averages. So talk me out of it.
Well, all I said before is I would wait. I will give some explanation on that.
Yeah.
I like gold better. I know that we want to get long silver because we like that metal. It's an industrial metal. One of our mentors and one of our colleagues, Pete Thomas, talked about it. It got us both excited about it. I've been waiting for a trigger above 15. I would just personally wait because I think you are stuck in a consolidation mode. And until you get confirmation, I would rather buy it above 15 than try to catch the low here at 1460. Okay.
Well, I'll just tell you what Pete said. Okay, because he said the same thing on palladium and platinum a couple months ago. And we've seen what happened to palladium and platinum the last couple months. Both of them did really, really, really well.
Sure.
He said, "quote If you can't buy silver at 1450, what are we doing here?"
Well, don't say quote. I think there might have been more words in there. So you can't quote a man if you don't have it word for word. He said paraphrase.
Yeah, but no, I do buy the bullish argument here, Tim. And I've always held the belief that gold and silver and the precious metals have been being held back based on some degree of demand issues, some degree of they've lacked the safe haven status that they have in the past. But they've also been held down through manipulation at the Chicago Mercantile Exchange and the Chicago Board of Options Exchange through increased margin requirements over the course of the last 7 years. So I do believe that there is a strong case to be made. And when the precious metals do turn around, Tim, right now the price ratio to silver or gold is right 85-1 right now, Tim.
I get it. Those are all investing arguments, though. That's not a swing trading or a day trading argument.
But I'm not talking about swing trading silver right now.
Then that's fine.
Position trading and taking a position in silver.
But again, if you're making an investor argument, then what does it come down to today, right? I understand if you're making a position trade or an investor argument, I think you could pull the trigger down here based on value and based on price and based on all of those signals you're talking about on the daily. If you wanted to be prudent and wait for 15 to break, I would understand that too. That's what I will personally do. I don't have any problem with the signal. The 50 cross, or what is that? The 20 crossing the 50, that's a moving average crossover. Very common. You're now sitting on a rising 20-day moving average. There is a buy signal from a technical standpoint right there, Matt. I just personally would wait. That's my take. Yeah.
No, the breakout's better. I totally get it. The breakout's better. And I'm going to wait for the breakout. It's 40 cents. I'm going to wait for the breakout, but I'm getting excited for it.
Getting excited. Buy that silver. Instead of buying it on the paper asset right now, let's do what Pete does, take a field trip down to the coin shop this week.
That's fine.
Let's do that instead. Because I got no problem buying physical. And by the way, hashtag halftime crew. I want to get my reminder out there. Give me a like and share if you're out there watching us live. We're about 45 minutes in here. We got probably about 25 minutes left here. I want to go through a bunch of content here, Matt. Silver, I like it. Commodities in general, we'll be breaking down. I'm doing a commodity report this weekend, so I'll break down all of these different ones, technical levels and all that kind of stuff. Give me the dollar real quick before we move into individual stocks. And we also have a thought or a strategy of the day we're going to talk about, and that's collaring. Matt's going to pop the collar. You watch. Matt, the dollar's rallying. Profit taking point or just more to come? What's your read? Every
Yeah,
time it's come up here for months, it has fallen.
I said we're buying 2 days ago, Tim.
Yeah.
We're not getting off that.
Yeah. Bullish. Yeah. Back that out to weekly. Multiple time frame on this one, I think, is really important. If we break this multi-month consolidation, Matt, and it's been from May till now, October, about 5 months where we've been back and forth, slowing trend. We pulled back. We started showing weakness. Now we're back up pressing resistance. It would take a lot for it to break and move. But it goes back to something we were talking about months ago, and that is the fundamental case for the dollar. With all of these other rag currencies, what's going on in Europe with political tensions and everything there, with all of the monetary policy, easing here, I don't know if you could tell me that we should not be interested in buying the dollar. Now, I don't know which crosspair. I don't know exactly which one we should be playing here on a day-over-day basis. Swing trading is different. But from a fundamental standpoint, Matt, if that breaks the high, could that thing run?
It could run to parity, Tim.
Yeah.
Which is 100.
Yeah.
I haven't done my analysis on the dollar yet. I'm doing the Forex report this week, so make sure you guys are watching that Forex report. But I would be shocked if I'm not a strong dollar coming into that report unless something happens in the next 2 days. I love the signal that we saw two days ago. It's a higher high pivot hammer candle. It's above all its moving averages. It's approaching resistance with strength going into 96. RSI is at 57, has plenty of room to go up. And if you look at the economic condition of America right now in comparison, I know the stock market is struggling over the course of the last month, guys, but the stock market is not the American economy. It's one aspect of the American economy. And the American economy is doing well enough to justify an increasing interest rates according to the central bank, according to Jay Powell. And that should have a fundamental appreciation on the dollar. But it's not just that, Tim. You also are looking at potential carry trades here on big hedge funds buying the dollar, selling other currencies. If you'll recall, Tim, over the course of 2000 to 2014, right? The number one trade in the world was selling the dollar and buying emerging market currencies. That was the number one trade in the world. It's called the carry trade. And the carry trade is when you buy a currency and you sell another currency and you basically carry the positive interest rates. So for example, if the dollar has a zero interest rate like it had in 2012 and you buy the dollar, you get paid zero interest rates. So if you sell the dollar, you get paid zero interest rates. So what you do is you sell the dollar at zero interest rates, you go buy the Australian dollar at 3% interest rate and you carry the positive 3% interest rate. But right now, Tim, with where the dollar interest rate is, the dollar has an interest rate higher than the CAD, than the euro, than the pound, than the Swiss, than the yen, than the Aussie. And so you have a fundamental problem outside the US with a lot of those markets and a lot of those economies struggling. They are still kind of in that depressed interest rate environment. The dollar is going through a rising interest rate environment. And when you're dealing with that, you're getting paid an interest rate when you buy the dollar, and you're getting paid nothing when you buy other currencies out there. But outside of even the carry trade and having the dollar have a higher interest rate than the other currencies. But outside of that, Tim, from an economic perspective, the dollar is known as a safe haven currency. And when there's fire out there in the world, the dollar is typically something that you want to look at as a safe haven. So I see that there as well. I think there is a strong case economically, fundamentally, and now technically for the dollar. Again, it's going to be choppy, right? We haven't broken out of the intermediate channel here. You got to get not only above 96, Tim, you got to get above 97 to start a longer term bullish uptrend in the dollar. But I love the short-term pattern here, and it kind of goes in line with the long-term fundamental argument as well.
I'm with you. And obviously, the market is agreeing here over the short term. They are rallying, and we've got some resistance here. There's a bunch of cross pairs, I think, that are very, very interesting right now, Matt. There's no question about it. Look forward to that report tomorrow. Let's talk about our topic of the day here.
Real quick, Tim, for the first time, instead of trading a cross pair, right, Aussie US dollar, I actually did the FX. What was it? FXA. Okay, so if you recall, I was looking at this yesterday, and I just wanted to test it in the live market, Tim, because I'd never actually traded FXA. And I bought put options, and shockingly, it's the only currency not going down against the dollar today. Thank you, Australia. But outside of that, Tim, it took me 1 second to get filled in that trade at a mid price. It wasn't bad.
Well, not only that, there are E-minis in the futures market. There's ETFs in the equity market. There's cross pairs. When we talk currency, guys, there's a lot of ways to play currency, and you should have a watch list of things that you can definitely get in there and use when you see an opportunity.
I love the fact that they're creating these ETFs to allow, the MA and the pause, the people that don't, because the biggest problem with the Forex market, Tim, a lot of times is, number one, it's a complicated market in the sense that you deal with, lot sizes, micros, minis, standard lot sizes, tick values, pips, all this stuff, but you also deal with massive leverage. And it's just, you would never recommend it to somebody who doesn't have a really, really, really good skill set. But now when you got, these ETFs in the stock market, like FXA, FXB, FXC, FXCH, and some of them aren't as liquid, but now you got, people that understand stock and options, and maybe they don't understand currency, but that they still can take advantage of the currency market using ETFs. I like it. It's just got to have a little bit more liquidity, but I like the progress we've seen in it.
Well, and just if you're out there and you're a trader, look at that chart. That is one of the most beautiful downtrending channeling charts that you can find across almost any market right now. See, currency is very technically driven. I love the currency markets. I want everybody out there to start using them more and more and more for sure. There's several things I want to get into here today, but before we go past the dollar and all this conversation, did you see the top 10 competitive survey that Cody put in the prep today?
No.
Very cool. So, and I wonder why Cody did bring this in. I would maybe want to pick his brain on it. But he said for the first time,
report from yesterday, though. I have read this report, but I didn't see it in the thing.
For the first time since 2008, the U.S. grabbed the number one spot in the world at World's Economic Forum Global Competitiveness Index, which used 98 different indicators to rank 140 different economies. U.S. number one, Singapore 2, Germany 3, Switzerland 4, Japan 5, Netherlands 6, Hong Kong 7, United Kingdom 8, Sweden 9, Denmark 10. Trump's got to take credit for that, right, Matt?
You got to get tweeting about that. Come on.
We need
the number one status. Make America great, baby.
Now, how much money for you to wear a MAGA hat?
There is not the amount of money in the world.
Anyway, I just thought that was interesting data.
I will tell you, there's a couple on this list that might be a little surprising. Singapore at number 2. Okay, for those of you who don't understand what Singapore is, they are a capitalist upon capitalist upon capitalist economic system. Mm-hmm. They have zero regulation. They don't have capital gains taxes, and you have so many industries around the world going to Singapore and Hong Kong because it allows them to compete in a global environment where you can't maybe do that because of regulations in the US. So if you look at Singapore and you're like, what's that? Singapore? Oh, no. Tim, you've been to Singapore last year. You've seen
beautiful
that
city.
Amazing. Yeah.
Also add in the fact that their trading position, like geographically, is just a hot spot to be able to put their finger in everything.
Same thing with Hong Kong too.
By the way, Cody, that's been true for 500 years. They were a hub for, if you go to the, Southeast Asia and whatnot, they were a hub for the global trade back when the Dutch East India Trading Company would send ships down through those regions, right? So Singapore, definitely a strong economy. I love the list. Very interesting. Give me Facebook real quick before we go on to our concept, Matt. We got to talk Facebook. And by the way, I'm going to do a midweek or a Thursday update for the option report. There's something that happened on the option report this week and that I think is really important to understand. Guys, if you're out there and you actually are using the weekend reports, just put in option report in the chat. Let me know if you guys are a halftime crew and using those reports. Some of those setups triggered early in the week, Matt. Chicago Merck and all those types of things. Others developed later in the week. Yesterday, Facebook was my favorite bear play in the market. Okay, it was set up well. I had it on my bear list to begin with. I saw the NASDAQ coming back up and pivoting and triggering. Here, Facebook is absolutely taking it on the chin here today, 153.74. See, when you're trading and when we talk about a stock picker's market, what we're meaning there, guys, is that when the market goes up, play the Chicago Merck up, right? Because you had a stock pick there, or play, many other companies like Lilly had a good couple of days there on swing trading. When the market is pivoting down, play your option or your stock picks down. Facebook is ugly here, Matt. It developed a new trigger, and this can happen for any trader. To me, it triggered today. Earlier in the week, though, we would have been waiting below 150. How often do you update your trigger plans as something's developing?
Every day.
Every day. That's right. Yeah.
Every day. I mean, think about it like this. If you were looking at Facebook earlier this week and you're saying, okay, the first trigger is under 150, but we're overextended to the downside and you might get a retracement, right? Then it starts coming up and up and up and up. Then you have to adjust your strategy. You know, the options, when we put a stock on the options report, Tim, or the stock report or the Forex report or the commodity report, they're not triggering on Monday. Those things are adjusting throughout the week based on what the price is doing. And so for me, me personally, I would not have shorted Facebook under 150 just simply because it was overextended. It's a really good trigger. Don't get me wrong. You certainly could do it. That's a momentum play. But I was expecting it to actually come up. And I thought the trigger, you had a beautiful trigger coming into yesterday if you were aggressive. Tim, you and I were on the phone yesterday coming into the close, and Facebook was like testing 160. And both of us said, if it stays under 160, we're shorting this. And both of us took short coming into yesterday under 160. But if you're looking at that yesterday and you're saying, okay, retracement back up into resistance, right there, old support, new resistance, hitting the 20-day moving average, doji candle, the trigger is right underneath the low of that day, which would have been, 157.95. That gets triggered in today. That's why you have to go here. And let me just put it like this. That's why you come to the halftime report every day, guys, so that you are prepared on a daily basis. One of the reasons we started doing this halftime show is we saw a lack of consistency within our students in executing their daily routine. And so what Tim and I usually do is we say, how can we help people execute their daily routine? So why don't we go do a show to help people execute their daily routine? And so that's what we're doing here on a daily basis. That's why we analyze the market skyline and we analyze crude. And sometimes it comes across that, oh my goodness, we're analyzing the exact same things on a daily basis. Yeah, we're traders. That's what you do. You analyze the market, you analyze the sectors, you analyze your watch list, you analyze your triggers, you analyze your portfolio. You got to act like a professional. And so come here every day. We're going to help you apply this on a daily basis. But right now, if you didn't put that order in yesterday, Tim, I don't think you can short Facebook right now.
Not at 1:30 Eastern, at 1:54. It's not at an entry point at this moment. See, and that's where your intraday skills and your
entry is back to the break of 150, Tim. If you're not in that trade right now, the entry's back to under 150.
Well, there have been a couple entries intraday if you're a good intraday trader as well, but I don't really like to do that with swing trading because it's assuming that you can combine a day trading skill set with a swing trading trigger, which not everybody can. I love the trigger. I love the setup. It was beautiful. There are other ones setting up. By the way, as we look at the market, Matt, Google down 3.5%, Amazon down 2.8%, Facebook taking it on the chin. Google is
boom. Oh, that's just nasty.
Where are we at? 1088?
1088 right now, support at 1080. If it breaks 1080 on Google, it could get ugly.
I agree with that. 100%. The whole market is unwinding here today on the NASDAQ. Looks like a lot of weakness.
Look at it. Looks like we're showing some weakness intraday.
Which, by the way, gets us up to our thing we want to talk about today, and that is collaring before these earnings and on this volatility, Matt. There's a couple of stocks here, and why don't we just take one? Why don't we take PayPal? Okay. And guys, earnings season is what is driving a lot of this, and it is so important to understand the risk and the volatility around these earnings events. PayPal is one of my favorite companies, but the NASDAQ is getting crushed. I could understand if an investor is holding on to 100 shares of PayPal, Matt, because investors don't make decisions on every candlestick, right? Mm-hmm. And if somebody was out there and they bought PayPal, say a year ago or whatever it might be, I would get that because I like the stock. But now you've got weakness and now you've got earnings here today. Matt, I want you to pop the collar, okay? And Christian hashtag that earlier.
Get out of here, Christian.
I want you to pop the collar and explain when we're dealing with some of our favorite companies, but they're showing weakness, how you can stay right in this kind of thing, but you can also protect yourself. Okay.
You know, it's so important to learn when to buy insurance, okay, on long-term investments. Anything short-term outside of volatility strategies, you're not holding through earnings. You're not holding naked puts or swing trades or, day trades, or you're not holding credit spreads or whatever it is. You never hold those things through earnings. You always play volatility trades. But as a long-term investor, we're not going to get out before every earnings. Would you agree, Tim? We're just not going to do that.
No, you can't. I mean, especially if it's your IRA, if
you're not touching that.
Yeah, you
right?
can't.
Never. Okay.
Yeah.
When you make a decision to invest in a company, you're not even going to get out of that company, even if it shows short-term weakness. You believe in the long-term valuation. You don't want to make those emotional decisions of get in and get out, because we've seen that over and over again. People make emotional decisions. They miss out on massive gains and they take on all the risk. So, but you have to learn how to protect that investment as that market is coming down, and especially in light of earnings. Now, not every stock, earnings is not as vital to every stock, right? Every stock has a different personality. But when you're dealing with a growth stock like PayPal, right? And PayPal acts more like a credit card company than it does, say, a tech company, for example, but it is a growth stock. And when you're dealing with growth stocks can go up fast and they can go down fast. There's a wonderful list that people have been following for a very long time called the IBD Top 50, right?
Mm-hmm.
And the IBD Top 50 is basically the Investor's Business Daily, and it's their growth stocks based on the CanSlim system that's been around for 60 years now, right? And it's been a wonderful list of for bull markets for a very long time. That list gets slaughtered in bearish conditions. And the reason I bring that up, and I don't know if PayPal's on that list or not, but PayPal definitely is on the Tackle 25. And on the Tackle 25, guys, you got to realize there's a lot of those stocks that are fundamentally strong, but they're growth stocks as well. There's not a lot of Walmarts on or Verizon's on the Tackle 25, because you can't do covered calls on Walmart or Verizon because you just don't have the volatility. So what we try to do with the Tackle 25 is give a nice little combination of growth versus fundamental analysis. But on that list, most of those stocks on earnings, you have to learn how to protect, because we're doing covered calls on it. Now, what I'm talking about here is a 3-part trade. Okay, step one, I want everybody to write this down in your just on your paper, your notes, whatever you're taking on. Okay, probably your iPad or whatever it is. Now, step one is you buy a stock. Okay, so let's say we bought PayPal on January 1st, or excuse me, January 3rd, when we released the Tackle 25. We bought PayPal. We've been doing covered calls on PayPal for the last 8 months. So, mostly good, but obviously what's happened in the last month has been fairly nasty to PayPal. So when you're looking at PayPal, step one is you bought the stock. Step two is you write the covered call by selling a call option against the stock you own. And that's how you bring in cash flow, right? So for example, if I buy PayPal right now, and just 100 shares, and we go out to the 40 Delta contract and I sell that contract, I can capture $2.83, Tim. Okay, so I buy PayPal for $77.70. I sell a short-term call option at $80 for $2.85, whatever it is. That brings in cash flow into me. That brings in $285 of cash flow coming into me. Now, I think we can all agree that making $280 now $7, if we do it right now, is a good thing. That money's coming into us. And Tim, that's right around a 3.5% ROI as well. Okay. Mm-hmm. And so basically I'm getting paid 3.5% ROI, and that's a great trade. That's a great trade, but you can always lose more on the covered call than you can make, because what you're doing, if you'll look at it on the analyzed chart here. So if I buy the stock, and then we sell that short-term call option. And again, I'm just using my rules of the Tackle 25. Okay, that's going to create that type of risk graph. And the risk graph always shows you kind of what you can do. And if you're flat line on the right-hand side of the risk graph, that tells you you can only make so much money. But on the left-hand side of the risk graph, look what happens. Oh, you can go down and down and down. Anytime you get a credit in the stock market, you can always lose more on the direction. And so when you're looking at that, you're saying, okay, I have the stock covered. I've received $285 of money coming into us. We've sold this option right here at $80, which means if the stock gaps up above $80, Tim, what do I have to sell the stock at?
Well, if it gets, yep.
Okay, I have to sell it at $80. So I'm giving up all my gain above 85, but what do I have on the downside? Well, on the downside, I have all this risk to the downside. That's why on a stock like PayPal that has the ability to move radically one way or the other, especially in this heightened sensitivity of volatility in the marketplace, that's why it's wise to say, okay, first of all, you would never hold that covered call through earnings. It would be better to hold the stock through earnings than a covered call. Would you agree?
I actually think covered call is one of the worst strategies to hold through earnings.
You never hold that through earnings. And
Yeah.
again, you wouldn't hold an individual stock through earnings, but holding a covered call is just insane.
Well, investors do though, right? I mean, investors do, which is why we talk about
investors
calling.
who are holding 30 years, but we're doing covered calls here.
Yeah.
So on the covered call, when you're holding that through earnings, you have to collar that trade. Okay, you have to collar that trade. And that's why Christian says, Matt, pop the collar. I'm not doing that, Christian. But I will say it's wise to collar the trade. So coming back into here, what collaring the trade means is it means we're simply buying a put option to protect that downside risk. That's what that means. So we still have the upside potential, but look at this downward movement. So if I come back and I say, okay, let me go buy a put option. And Tim, I'm not going to hold this very long, this put option. I'm holding this put option maybe 1 to 2 days, right? So Tim, how much time would I need to buy?
If you're truly just collaring to hedge, that 29-day November option looks
I would
juicy.
be fine with that.
Yeah.
I would be fine with that.
Yeah.
Now, Tim,
if you're collaring because you want to have a hedge for months, you might
9 months. I mean, but we're just covering the earnings. I'm not covering market cycle risk here. I'm just covering now.
Right.
You might want to cover that too, but I'm not covering it for that purpose in this example. I'm just covering the earnings risk. So I'm receiving $284. So I'm going to come here and say, okay, I'm going to go down to that 27 delta right there, and I'm going to buy that put option. And as you can see, look what happens to my risk graph, Tim. Now I have capped my loss to the downside. I've covered my risk. I know I only have so much upside potential, but look at that risk graph now. Simply by clicking one button, I've covered my entire downside risk. And that's what collaring the trade means. And we wanted to bring this to you guys today because we know what Thursday is. Thursday's theta day, right? But there's not a lot of great naked puts or credit spreads or covered calls right now, given the fact that we're in earnings right now. In future Thursdays, we'll do a deep dives into credit spreads and naked puts and covered calls and diagonal spreads and horizontal spreads and, you know, the iron condor and all that jazz on Theta Thursday. But when you're dealing with the market environment in earnings, theta has to be protected. And when you're dealing with covered calls, it's very wise to collar those trades coming into earnings.
Agree
and
with all of that.
If you like that deep dive into the caller, guys, go ahead and give us a like and a share. We really do appreciate that.
You know, here we are. Halftime report is over. I'm looking at my day here, Matt. Got a lot in front of me. Market volatility. Give me a quick update on the overall market. We go into the 5-minute chart. In our Slack channel, I posted about 8 o'clock in the morning, and it's the kind of thing that we have a community for. Guys, if we break 7,200, look out. And here we are, look out. Now we're at 71.17 on the NASDAQ. The tech stocks are the ones taking it on the chin the most. 8 days ago, we had a 4.5% sell-off, Matt. This is the kind of day that could spin out of control like that, guys. Most likely it'll snap back and have a late day recovery like we've seen on most of these trading days, Matt. But you got to approach the finish of the market with caution and with purpose and really just execute your trading plan. Don't get swept up in emotion. We're at a low point, Matt, 7,100. I have no idea how the last 2 hours are going to go here, but obviously very, very bearish. And there's a lot of trades on
7,100 is really important. That's the level you want. If you're looking at this, what the market's going to do, track that 7,100 right now. If it breaks, you could spin out of control like we did last Wednesday.
Very good. All right, guys. Cody, great job. Matt, great job. Any stocks that you're really looking at here before the end of the day, Matt? I'll give you a couple that are on my radar right now.
Yeah, let's rapid fire. Let me just do two stocks here that we looked at from the bull side, Tim. I got enough bearish trades on. ABT, not slash ABT. ABT looked good earlier yesterday, breaking that 50-day moving average. You can't touch that stock anymore. Next would be AMD. When does AMD have earnings? AMD has earnings coming up fairly soon. Can't touch that stock either. That's why earnings can be frustrating sometimes. You find good technical setups, but it has earnings next day. CLF, same thing, same problem. Earnings tomorrow.
Give me CME. CME was a really beautiful bullish setup. We talked about it through the week. It was on the option report last week. There were scenarios where I would have gone for a second target, Matt. With the market weakness here today, that is a profit-taking point, in my opinion.
Can I make one recommendation?
Sure.
This was a great trade coming out of that.
Mm-hmm.
This would also be an opportunity to roll a straight directional call option into a bull call spread instead.
Sure, you could hedge it, but you got to do something.
You got to do something. Either roll it
aggressive.
Yep, I agree.
Because that candle up there's ugly.
It's an inverted hammer at resistance. Yeah, that's ugly.
WDC, which is something that's been on my bear list for a long time. Western Digital.
We have nailed this company over and over and over again.
It's got a mini pivot, but I'm waiting for support to break.
No, okay. This is a descending. This is an inverted cup and handle pattern now, Tim. Inverted cup and handle patterns, descending triangles, however you want to categorize that. When you have horizontal support, but then when you have decreasing resistance areas, as you can kind of see here, okay, or excuse me, let me draw it from there, and then you have one, that's the better one right there. When you have a decreasing resistance channel and you have horizontal support, that's either an inverted cup and handle or a descending triangle. The trade signal is very easy. It's the break of support. The break of support is a really good trade here.
Quick tip on a stock EL on this one. Here's an example, guys. Here's a life lesson, a learning lesson for you out there as traders. Matt, I had a trade order dialed up this morning, and my limit order just didn't get filled on a put option. And you know what? I'm not going to chase it now that it's down another.
No, you're going to short under 125 because that's a better signal anyways.
Changes the trigger. That's right. Exactly.
There it is. There it is. Changes the trigger. You didn't get triggered. You don't chase it. You reassess, and you see it 125. You go to the breakdown at 125. And to answer Peter's question, inverted butterfly, are they good place for earnings? We love inverted butterflies on volatile conditions when we expect a big movement. Check our analysis. I believe it was on Tuesday for Netflix, Peter. So halftime report from the 16th, I believe, Peter. We looked at inverted butterfly on Netflix.
CLR getting crushed. It was on the option report bearish. It's breaking support. You've got potential for swing set up here. And then the last one is DLTR, Matt. Here's an example where if something fundamentally changes, you just might eliminate it from your idea list. I was looking for a breakdown map, but that candle on Tuesday, even though today is a bear pivot, you have a red candle and a pivot off the falling 50. I just think there are better plays. You had an increase in volume, a large green candlestick that shows me something on the bull side.
We were looking for the breakdown here. We never got the confirmation to retrace, and I don't think there's a directional play here. I will tell you one thing as we leave out the halftime crew here today. I was driving with my daughter, my 9-year-old daughter, Katira, yesterday, and we were driving by a store called Dollar Tree as we're looking at it right now, and she says to me, "Daddy, there's a lot of dollar stores." I said, "Yeah, there's Dollar Tree, Dollar General." She goes, "What about the 99-cent store?" Said, "That's kind of like 6-minute abs, Cat." And she goes, "What's that?" I said, "I'll talk to you 20 years from now."
Listen, I got this great idea. 7-minute abs.
7-minute abs.
Well, you know, those 8-minute ab guys, you know. I've got a better idea. Come in 1 minute lower, save you some time on your day. Perfect.
Abs. And what was that movie, Halftime Crew? If you can nail it on the 7-minute abs, you're fantastic. Because I love that comedy show. That is a great comedy. Let's see if they get it.
How many hints should we drop?
Well, there's a couple of hints we can't drop because it's 2018 and not 2008.
Sure. Well, I'll just say Ben Stiller.
Ben Stiller
movie. Okay, there's a hint right there. Matt Dillon. Yeah.
Matt Dillon's great in it, right?
Absolutely.
Brett Favre makes a cameo appearance. Adam Stewart, fantastic. Something About Mary. It is. Good job, Adam. Something About Mary. And guys, as that's the best way to end this halftime show here today. Guys, halftime crew, thank you so much for coming out and supporting us on a daily basis. Thank you for being the great pro members of Tackle Trading. If you're not a pro member of Tackle Trading, guys, you can get over there to Tackle Trading. You can sign up for a 15-day free trial and get a test of everything we're doing. And this is what we have going on in the next week, guys. We got the Cash Flow Club today. We got the scouting reports coming out on Saturday, and we got a mini class. We're calling it a mini class for Technical Analysis 101 for all those pro members on Sunday and Wednesday of next week. That's a value add we're going to be doing once a month for all you pro members. It's just kind of because we understand that we got a lot of traders who struggle with some of the basics and in our shows, in our lounges, and so on and so forth. So we're going to be doing that as well. And one thing, make sure if you're struggling with anything, guys, get into the coach's lounge every single day. Ask questions. That's what that coach's lounge is for. It's not for Mark or Cody or anybody to get in there and teach. It's to help you guys understand the market, answer your questions, all of that jazz. So definitely do that as well, guys. And if you love the halftime report, give us a like and a share and tell somebody about it, guys. We build this through the word of mouth, and that's what we do. So if you guys can tell somebody you care about it and so on and so forth, let's get those attendants up here in the halftime crew for the halftime crew. You guys are the best. We love you guys. Reach out to us if you need. You can get me on Twitter anytime at MattJustice13, Tim Justice, Utah. You can also go at Tackle Trading, at Trading Justice, but also email team@tackletrading.com. You need help for anything, guys, team@tackletrading.com. Thanks, guys. #halftime crew. Peace.